America is home to 33 million small businesses, the beating heart of communities across the country.
And proof that the American dream is still alive.
This is a show about those dreamers and doers and the communities they serve.
Their real life stories.
Their struggles and successes.
Their grit, determination, and passion.
And the people who fight
to keep their American dream alive.
I'm Alfredo Ortiz.
I'm Elaine Parker.
And it's time for another episode of Main Street Matters,
America's small business megaphone. Hi, everyone, and welcome to another episode of Main Street Matters, America's small business megaphone. I'm Elaine Parker with the Job Creators Network, and today we are joined by one of my favorite guests, John Carney, who is the economics and finance editor at Breitbart, and of course, the author of Breitbart Business Digest. And if you don't get that, you need to subscribe to it. John, welcome back to the show.
Yeah, thanks for having me.
Well, it's been a few months since you've been on, and, there's a lot of things happening right now. I have to say that the January jobs report gave me so much hope, and my whole line on it was, he's done it. The administration has put the right policies in place, and we're ready to take off. And then Iran and the jobs day last week was so bad. I was speechless. A loss of 92,000 jobs. What were your initial thoughts on that jobs report?
Yeah, it was very bad. I've been telling people don't sugarcoat it. 92,000 jobs is very bad. I had been trying to tell people for a while that because we've done immigration reform, because a lot of people have been deported, because we have a lot of retirements, that you should expect jobs numbers to be lower than what would have been a jobs number in the past. But that means getting jobs numbers that are between 30 and 50,000 in additional jobs. 93,000 loss is bad, no matter how you want to look at it. There were some particular factors in it. We had, I live, up in the New York City area, and the weather was crazy in February. We had snow everywhere. I think there was a big weather effect in this. There was a huge strike in the healthcare sector, and that actually got called out in the jobs report where they said that affected things. But even if you took away the weather effect and the strike effect, it still would have been a bad jobs report. And one way you can tell that is, yes, January was very good, but December got revised down from a positive jobs number into a job loss. So that tells us that the sort of run rate for jobs is actually much worse than what we would hope for, and than what we thought. Traditionally, this should mean that the Federal Reserve looks at this and says, well, if the jobs market is starting to slow dramatically and unexpectedly, remember, Jerome Powell just told us that he thought the jobs market had stabilized. He said that just in January. Well, it doesn't, the February numbers don't look like stabilization of the labor market. So the Fed should be considering cutting. Unfortunately, they keep communicating that they're not going to cut. And so I think we might be in for some rough months as long as Jerome Powell is still the Fed chair, which he will be until May. Until May.
Okay. The revision, the interesting thing that I kind of chuckled at, if you could actually chuckle that day, was the New York Times said we can no longer trust the numbers coming out of the Department of Labor.
Right. Suddenly they woke up to that. That's a version of Trump derangement syndrome. It's just like they discovered affordability being a problem the day Donald Trump got elected. Suddenly headlines were, oh no, people can't afford things. Well, and this actually was in the jobs report. There was some good news. Wage growth is pretty strong. That is a positive. It's beating inflation by a lot. So things are actually becoming more affordable in America, because a good definition of affordability is, are your wages going up faster than prices? If they are, then affordability is improving. So that was good in the data. I also think that one of the things that's continuing to happen that's pretty amazing is that the federal government is downsizing month after month. We lost another 10,000 jobs. I look at that as almost an addition of jobs, because what we've done is we've lost hundreds of thousands of federal government positions over the last year. But what's happening is these people are going out into the private sector. They're actually becoming a source of labor for the private sector instead of being monopolized by the government sector. And the other thing that's also happening that's in the data, it wasn't in this jobs report, but it was in the productivity data that came out of the Department of Labor, which is the workers the productivity is rising very rapidly, and much more rapidly than economists would have thought. And it's been rising rapidly for a few years, but it really seems to be even accelerating even more. That's another good sign, because it means that even if we aren't creating that many jobs, we're getting more out of each hour that people are working. That leads to higher wages. So it was the 93,000 was very bad, but wages were good. Productivity has been good. And then if you look even deeper into the jobs report, I think you can see that we're probably not going to see the 93,000 loss again. I do think the weather factors in there, but I do think we're going to see volatility over the next couple of months, where we'll have just what we saw. December bad. But look, has been a pattern. September was bad. December was bad. January was really good. February was bad. And so, we may get this choppiness. That's not great, I think, for consumer sentiment. But I will say the final factor that's good in the jobs report is that 4.4 unemployment rate is very good. It went up a little bit, but this is a very low unemployment rate. It's an unemployment rate that for most of my life, people would have almost told you can't have it be that low. People thought 5% was as
full
low
employment.
as you could possibly go. Right, exactly.
I grew up, when I first started working after college, we were at about, I can remember because I was in the recruiting area, so I watched jobs a lot, and we were probably hovering right, and this was during the Clinton administration, so it was always around 4%, and they just kept saying, well, that's full employment, that's why we can't find anybody.
Right. That was a boom, right? That was during the internet boom. That was supposed to be a really good time. We were rebounding from the end of the Bush era recession. So that was considered really good. It is the 4% unemployment is good. That's another reason why we shouldn't expect jobs numbers to be huge month to month, because there aren't that many people to put to work. Remember, these aren't, when we say like jobs created in this month, we're actually saying people who are brought onto payrolls. The businesses actually are creating many more jobs than people are being brought on the payrolls. You look at the JOLTS report for that. That shows that there are many openings, but there aren't that many people looking for work. So the unemployment rate is very low. I think that will help continue to boost the economy, because as long as the unemployment rate stays low, families feel comfortable going on vacations, buying new cars, appliances, clothes for the kids, shopping. And we're seeing that in the not the consumer sentiment numbers, but in the retail sales numbers. They remain very strong. People are still going out and buying things without a lot of job creation. And I think that's because, as I said, unemployment is very low. So people have and layoffs are very low. If you look at the week-to-week jobless claims numbers, they are very low. And so what that tells you is, even if we're not creating a ton of jobs right now, people aren't losing jobs. And most people who want a job and are looking for a job have one.
So you talked about productivity and seeing that rise. And, I obviously think that has a lot to do with AI.
Mm-hmm.
We're seeing more small business. I mean, obviously we saw it in corporate headquarters implementing AI, and we did see some layoffs in corporate headquarters, but then say, some of the retail companies, they would eliminate jobs within their corporate headquarters because of AI, but then they would start to implement AI on the front of the house so that they could improve customer experience. So a trade-off in terms of jobs, eliminate these, add those, and improve the customer service experience. Now we're starting to see small business owners incorporate AI into their businesses and become more productive as well. What are you seeing out there in terms of
Yeah, actually,
AI?
it's funny. My local pizza place is using AI, and people said, "Wait, what? How are you using AI?" They've actually just used it to do something that a big business could do without AI, but it was very difficult for a small business, which is keep track of. And they did this, sort of almost intuitively before, but keep track of when orders surge. Obviously, like Friday night is a big night for people ordering pizzas. Um, but they're actually able to more precisely track this stuff because of AI, and AI is now giving them advice on how much pizza to make on a Friday afternoon based on the way sales go. Now that is something that was possible to do before, but when you're busy running a small business, you don't always have time to sit there and like run spreadsheets on this stuff. And so it is allowing small businesses to do things that big businesses used to be able to do. I think that's going to be a pretty big advantage for small businesses going forward. I think we'll see more of this. On the big business side, we will see people lay people off. We saw Morgan Stanley recently laid off, I think, 3% of its employees. A lot of them are on the back end that were doing sort of data processing work
Right.
that can be done by AI. But those people, I have to say, are very smart and very productive. I am not worried that the economy will not find work for the people who were programmers in banks and are now no longer programmers in banks. We will have great uses for them. One of the things history teaches us is actually when you have a very productive workforce, and productivity starts to increase, that actually doesn't wind up with mass layoffs. Like mass unemployment comes from a Great Depression when demand sinks. It never comes from an increase in productivity and innovation. That actually tends to drive employment up. And I think that's what we're going to see from AI. Jobs will shift, but I don't think we'll see a major downgrade in the ability of people to find work.
Well, I think if you're anybody sitting around as people did when the internet first came out saying, I don't need that, I don't need that, you're making a big mistake. You need to
Absolutely.
start learning how to use AI and learning how to incorporate it in terms of your job and make your job better, faster, more productive, and find better ways to use it in your job. And that way you will keep your job because it will evolve into something new and probably much more interesting than you're doing now anyway. Um, so
Yeah, everybody should remember AI. These companies that are firing people because AI is doing some of their jobs are simultaneously hiring people to run the AI. So, if you're a young person out there, make sure you know how to interact with all of the various commercially available AIs. One of my brothers is actually creating you can create your own AI agent that runs on a server that he has at his house to teach himself how to do this. This is something that people can do and really should be doing because there is, as much as the headlines sound dire, there's going to be a lot of opportunity for people in AI, as well as people who, the downside of some people whose jobs will be displaced from AI.
I think so too. And an interesting thing is you can simply ask AI to tell you what kind of opportunities are going to be there, and start using AI to evolve your skills and evolve your positions, and your work and your productivity. That's the interesting thing is use AI to use AI, right?
Yeah, well, a good example, a historical example, when my father entered the practice of law decades ago, there were entire floors of the law firm where there were typists that, primarily women typing out memos, and, you would send your thing to the typing pool to go have it typed. So word processing eliminated all of those jobs. There's no more typists. But we didn't have mass unemployment of those young women. Those young women now are working in actually much more productive, higher earning jobs than they did when they were typists. So I say, like, there was a fear, by the way, back then. Oh no, what will happen to all the people whose expertise is typing on a typewriter? Well, there's work for people. One of the, you can call it one of the horrible things about our mortal existence is we will never run out of work to be done. That's just part of being a human being. Our work is never quite done. We're never going to be like, okay, that's it. We did it. We built everything. There's no more work to be done. We will still be working 25 years from now, 100 years from now, 300 years from now.
Right. Let's talk energy. There's been a dramatic change. A few weeks ago, we watched the State of the Union, and the president was able to talk about low energy prices. He was able to talk about a wonderful partnership with Venezuela and that we're bringing in Venezuelan oil now. And suddenly things have changed, and we've seen a spike in energy prices, depending on where you are in the country, probably 40, 50, 60 cents a gallon. I always think, how can the stuff that's in the ground right now already be more expensive? I mean, that part doesn't make sense to me, and I feel like asking the question. But we're producing a lot of oil here. So why are we seeing the spikes affect us here? If the administration has had such a focus on domestic oil production, why is what's happening in the Middle East impacting us so much here? That's just huge price increase.
Sure. Well, one thing is, remember, we do sell oil into the global market. So although we produce oil here, our oil is subject to what happens to the supplies around the world. So if supply goes down, which has happened, not that the actual supply of oil has gone down, as you said, it's still there, it's still in the ground. Until very recently, it was still coming out of the ground, but it's caught in the Persian Gulf. It's on tankers in the Persian Gulf because of the Strait of Hormuz. So that's why, if you look at somebody asked me the other day, they said, if you had a crystal ball, what do you think will happen to oil prices? And I told them, well, the good news is I do have a crystal ball. And my crystal ball is called the oil's futures market. So and not to get too technical on this, but the oil prices we see are basically what the spot price of oil is expected to be about a month from now. So that when you hear like Brent crude, it's actually a Brent crude futures price. And then but you can go further out. So you can actually arrange to buy oil at a certain price a year from now. The further out oil prices actually tell us oil is expected to come back down. So the farther out you go, the less expensive oil is. The technical term for that is backwardation. And that is, we're in what the traders call extreme backwardation, meaning the oil prices, the near-term oil prices are much higher than the longer term. So that tells you that investors believe that oil prices will come down again. I don't know how quickly we'll get down to, we were at $62 at the end of December. I don't know how quickly we'll get down to there, but fundamentally the oil situation hasn't changed. The world supply is still there. OPEC wants to cooperate and produce a lot of oil. We produce a ton of oil. There are some regional problems in the U.S. California, the whole West Coast. 150 years ago, we built transcontinental railroads that could go all the way across America. We have no pipelines that go all the way across America. So there's a very strange situation where if you're making oil in Oklahoma, you can't get it to California. California oil comes from tankers from overseas. That's a problem we should solve, but it's very difficult. Not technologically. Like I said, 150 years ago, we knew how to get a train track across the Rocky Mountains. We could do that with a pipeline. The problem is places like California say they want to get rid of the internal combustion engine by 2050. Well, if you know that, and it's 2025 today, Are you going to build a pipeline into California? Of course you're not, right? And the environmentalists won't let it happen. You'll be locked up in lawsuits forever. So there are regional problems with oil prices in the U.S. Gasoline prices tend to go up almost as soon. It doesn't take a lot of time. People wonder why that is. It's because, and businessmen will understand this. If you, when you are selling gasoline today, you're using that money that you're making to buy gasoline next week. So you're not just selling it based on the price you paid for what's in your tank under your gas station. You want to make sure you have enough money that you can pay the oil company to fill your gas station next week and the week after that. And so they are constantly trying to make sure that they are not behind on the pricing, because if that happens, they can be in a lot of trouble. So the gas price is anticipating what it will be in the future and not just what it is today.
Well, I know the message from the energy secretary has been this is a short-term spike, and that we're going to see prices come down. Be patient. Do you feel like that's the right message? Do you feel like the American people have any patience for it? What
No.
would you, if you were sitting there with them, what would you say on here's what you need to be telling the American people?
Right. Well, what I would tell the American people is I think reality beats rhetoric here. You can tell people be patient, but that doesn't help people. What they want to see is execution. They want to see clear the Strait of Hormuz, get the oil price down. You will not be able to convince people, and for good reason. Look, wars are unpredictable, complex, and they can go, everybody has a plan basically until they start dropping bombs, and then suddenly the plans go awry in every war. And so you may say this is going to be a temporary phenomenon, and people may want to agree with you. I want to agree. But you have to worry that things might not go as well as planned. So I think prices will stay high and people will stay nervous as long as the prices stay high. Once you are able to make sure that ships can get to the Strait of Hormuz, then the price will come down. There is some good news. I saw today that the Japanese stock market, Japan is ultra exposed to Persian Gulf oil. They import all of their oil and most of it from the Middle East. Their stock market was up today for the first time since this war started, basically. And I think that's the investment community saying, okay, we think that this thing is actually going to get resolved. Whether it's the war gets resolved quickly, which I do think it will, they probably will happen, or just that the blockage of the Strait of Hormuz gets resolved quickly. Either way, they think what happened over the weekend, where oil prices went to $110 a barrel, is not going to last. And we're already down in the 90s today. We'll be probably down in the 80s soon. It would be great to get back down to the 60s, but we'll see.
Have you been following India? Is I guess the president has given permission for them to buy oil from Russia. They're ready to refine it, and they've got about 30 million barrels that they can put out into the market. How does that impact prices?
That should be good. Because again, remember what we're seeing right now is not like a normally I would say like, don't pay attention to short-term fixes. But if you have a short-term problem, a short-term fix is actually appropriate. So in this case, being able to, have India basically act as a strategic petroleum reserve for the world, really Russia, that's what's really happening, is bringing Russian oil into the world market will help. We also had the G7 nations say they were willing to tap their oil reserves as well. I think that will help. I think the Trump administration has a pretty good reason for not wanting to announce that they are going to do a strategic petroleum reserve release in the U.S. Because if they announce that, people may assume, that means this is going to go on for a long time, that they don't have a plan to try to clear up the problem in the Persian Gulf, and that they're going to have to resort to doing the strategic petroleum reserve. So I think they're trying to hold off on doing that. They can do it in an emergency, but I think they're trying to hold off because they're worried that would send the wrong message.
So I know Senator Schumer is demanding that. I initially thought that's got to be some sort of trap, obviously, because Biden did it, and it was while it brought down prices, it still backfired in terms of the PR battle. And of course, we've not filled them back up since.
Right.
What are your thoughts on sort of that strategy from Senator Schumer? What's he doing?
Look, the Schumer is just a like walking case of Trump derangement syndrome. If whatever Donald Trump does, Schumer will declare that it is the wrong thing and about to destroy the American economy. I don't pay very close attention to him, even though officially he had an apartment just a couple blocks away from me in Brooklyn. I sometimes saw him on the street occasionally, actually, but he is not. He doesn't have the best interests of America at heart. He's not actually giving good advice to the Trump administration. He is just trying to score partisan points, which I think is a really irresponsible thing to do. We really are at war. There is a global oil crisis going on. And I would also say I didn't like when Biden used the strategic petroleum reserve the way he did. I don't think you should use it just to address oil going from $60 to $90. I think it really should be used in a case where there is a major, major supply problem where you actually can't get oil, right? Like when people go to gas stations and you have like 1970s style lines to get gas. That's what it's for. It's not to manipulate prices. So I don't think we should use it in that way. And by the way, if Trump did that, if Trump was trying to push prices down with the Strategic Petroleum Reserve, I guarantee Chuck Schumer would call that irresponsible and terrible and attack him for doing it.
Well, it's only been, I guess, not even 2 weeks
Right.
since we've started seeing the increase. It seems like very short time to throw in the towel and start releasing the reserves anyway. Especially since we need to see this play out a little bit more. The president, some of his remarks yesterday seemed like there was some resolution on the horizon, and we'll have to see how that plays out. Um, Here's a subject that we haven't talked about in a long time and is getting no attention, and that's tariffs. Because of all of this conflict, what are your thoughts on the Supreme Court decision?
Sure. I think the Supreme Court decided it wrongly, but not necessarily surprisingly. The Trump administration knew going into this, they were using the International Economic Emergency Powers Act, IEPA, in a way that it had never been used before. And they knew it's a risk. Anytime you take an old law and try to use it in a novel way, there's a not unreasonable chance that the courts are going to say, no, you really can't do that. And that's what the court said here. You can't use IEPA for tariffs. But they didn't say you can't do tariffs. There are many other statutes that under which the administration can do tariffs. And they've been preparing for this for months and months and months and months. And so immediately they announced the Section 122 tariffs. Those came out. They are going to use the 150 days that those tariffs are allowed to last to do the background work that they need to do to be able to implement other tariffs. So we will have tariffs. Unfortunately, they won't be as flexible as the IEPA tariffs were. And the value of the flexible IEPA tariffs was that it really allowed us to do a lot of like kind of spot negotiation. So when we were trying to get India to stop buying Russian oil, Trump was able to say, well, we're going to raise the IEPA tariff on you to 50%. And India said, oh, okay, don't do that. We'll stop buying the oil. And then we were able to lower it. You don't have that kind of flexibility under these other statutes. Congress probably should revisit it and think, do we want to give the president some more flexibility? Maybe caps, or time limits, that's fine. But I think right now, the way it's written, it really doesn't track with the ability to do sort of international trade negotiations and use tariffs as one of the sticks to force other countries to treat the US more fairly, or to comply with other foreign policy and diplomatic demands. Trump was using it in ways that had never been used before. It's going to be harder to do that now. But the good news is the tariff regime isn't going away. And so we really will be able to both protect domestic production and also continue to force our trading partners to open their markets to US products.
So one thing that the Supreme Court did not address was, are these companies entitled to refunds?
Yeah, I think that the Supreme Court was smart to not get into that subject. I think ultimately most of the companies that paid the IEEPA tariffs will get a lot of that money back. Some of them may actually end up just saying, well, we got the money back, but we're going to have to pay the tariffs going forward. So we're not going to, send it out in like some sort of massive special dividend to our shareholders, but we're actually going to keep it on reserve to pay the dividends over the next, or pay the tariffs over the next 2 years.
Like a credit?
I do think that I've talked to people in the Customs and Border Patrol and also the Treasury Fiscal Service. That's who handles refunds. The Customs and Border Patrol people collect the tariffs, the customs duties. The fiscal service processes them. And they're actually very familiar with doing refunds, not of this size. I mean, this is an epic scale, billions of dollars, but even just in the normal course of things, people pay tariffs. They pay an estimate of what the tariff is supposed to be, just like you and I do with our income taxes, right? We pay a tax. Then in the end of the year, we do a bunch of paperwork and we say, hopefully, actually, I shouldn't say hopefully. If you do your taxes right, you should get no refund because it means you kept the money. But then again, a lot of us, we're pretty excited when we're like, oh, it turns out I overpaid. I get, getting a refund. That's cool. Same thing happens with tariffs. Even in the ordinary course of business, companies pay them, fill out the paperwork at the end of the year. Sometimes they owe a little more. Sometimes they owe a little. They get a refund. That's a process that's going to happen. It's just a bigger scale. But from what I'm told, it's not like, I know a lot of people were saying, including the Trump administration, it's going to be chaos if we have to repay this money. I'm told it's not going to be chaos. It'll take time. It's a bigger scale, but the tariffs were collected in a very orderly way. They know everybody who paid the tariffs, like directly, and so they can refund that money directly as well. It's not going to be an impossible task.
Would they actually refund it and cut a check, or would they say, like my accountant every year says, if you're due a refund, you want to put it towards next year's, taxes?
Yes, both will probably happen. Because the Trump administration announced new tariffs right away, a lot of them probably will say, well, how about we just get a credit against which we can use this for future tariffs? So that will happen. Some companies will take the money back altogether. But again, I don't think it matters that much either way. I think the tariff revenue will continue to come in because of the substitute tariffs that have been put on. And some of that will be sort of recycled back out in the form of refunds. So, some companies will be paying the new tariff on the stuff they just brought in while collecting the refund on the stuff that they paid for last year. I think that it won't, it's not going to have a huge economic impact either way. And I don't think it's going to affect companies' share prices either. It may have a little bit of an increase in share prices, but only in a third derivative way. People price stocks based on future earnings expectations. And so a one-time tariff refund doesn't change the prospects of a company very much. So it shouldn't affect stock prices very much.
Well, John Carney, I love having you on and having these conversations. We seem to have a never-ending list of topics to talk about. Tell everybody where they can read about what you're working on and subscribe to the Breitbart Business Digest.
Sure, yeah. Breitbart Business Digest comes out every day. And we try to explain not just like what happened in the economy in the last couple of days, but why it's happening and what's going to happen next. You can go to Breitbart.com/newsletters and you'll see a whole bunch. Breitbart Business Digest is one of them. Totally free, gets mailed to your inbox. You can also find it on our website. You just look for Breitbart Business Digest. You will find those. They come up. It's better to subscribe, I will say. They get up on the website, but about an hour and a half to 2 hours after it hits people's email boxes. So you'll get it first if you sign up and subscribe. You can also follow me. I'm on X, Twitter, at CARNEY. And Breitbart.com/economy has all our economic coverage, even beyond Breitbart Business Digest.
All right. Well, John, thanks so much for joining us on Main Street Matters, America's small business megaphone. And thank you all for taking the time to tune in. Main Street Matters is part of the Salem Podcast Network. New episodes debut every Wednesday and Friday. You can subscribe to the show wherever you get your podcast from, and we'll be back soon with another episode.